Good morning, folks. Welcome to Friday. Friday is here. Friday is upon us. Super glad that you're here this morning. My name is Tyler. If you're here for the first time, welcome. I'm going to be helping navigate us through the wild world of day trading futures. Futures has quite crazy. The Nasdaq is even crazier. Volatility is endless. So you buckle up, you're in for a ride. I'm going to be sharing my daily trading bias. I'm going to be sharing order flow. We're going to be talking through order flow, where we expect price to go based on how price is moving, P to raise, discount, premium, all that good stuff. So it's going to be a good time. If you're watching this after the fact, you can use the chapter markers below to jump to the key moments in the videos. If I take any trades, you'll find that as well as the description of what I was thinking and why I took the trade. Lastly, if you are looking to take your trading to the next level, and you want to start using other people's firms, or you want to, trade multiple accounts. Well, Apex is currently doing an 80% off sale, and they've given me a code DTJ where you can get 80% off your next Apex account. The code DTJ will always give you the most updated kit discount they're offering, whether it's 50, 60, 80, or even in some cases 90% off. And with that, that's all we got this morning. Let's go ahead, open in prayer, and we will get started. Lord, we honor you. Thank you. Thank you for getting us through this week. Thank you for teaching us lessons. Father, thank you that as we apply ourselves, as we commit ourselves to as we seek first your kingdom and your righteousness, Father, you provide everything else. And so, Father, we seek first your kingdom, even in our trading. Father, let the lessons that we learn, Father, be instilled in our hearts, that would make us more like Christ. In Jesus' name, amen. All right, folks. Welcome. How are we doing? Tony? Ricardo? How are you doing? All right. I went ahead and I marked our highs and lows. We got our previous day low here. We're going to do a top-down analysis. Today is Friday, and it is the last day of the month. So I'm expecting more of a retracement day. Here's our monthly price action. Here's our monthly candle for February. Huge candle. I mean, gigantic. And most of the month we were up here. And then in the last week, we basically did that. So from a monthly perspective, huge delivery. Dropping down to the weekly candle, we have this weekly candle right here. Now, let's go ahead and let's mark out our 20 to 30% for a 30% retracement. Because that is what we should be. That's what we should be expecting approximately, is to get a 20 to 30% retracement. I'm going to change some of these indicators here. I want something that's light. I don't want it to be obtrusive. Alright, that's what I think I'm going to do. We're going to get rid of the price levels, and we will thicken those bad guys up. Alright, so there we go. Let's lighten them up even more here. 66%. Alright, so here's our expected retracement range. Is somewhere in between this in this range here. So between the 30 and 20%, that's where we potentially could see price run into, since it is a Friday. Dropping down to the daily time frame, we have our highs and lows that we've marked for a previous day range, and we have the equilibrium of that range. I like that the 20 to 30% is under or in discount of that range. So this is, in my view, a realistic area to target. Dropping to the 4 hour, we have some equal highs that are sitting right here. right at the previous month low. I think that could be an easy target to try to reach towards. Looking at the hourly, that also overlaps with the London high we have sitting right there. And then we have obviously this large 1 hour fair value gap, and you could get all the way up into this hourly fair value gap as well. You have this nice wick that is landing on top of that 30% retracement, which makes this portion of price action, at least in the hourly time frame, a balanced price range. So if we're looking at delivery, everything here needs to be mitigated and properly delivered. So this is kind of the range that I'm looking for price to play in and move towards, and kind of what I'm just looking to get 20 to 40, maybe 60 handles in this direction. Okay. I've been bullish, or not bullish, but I've been looking for those retracements all week. If I'm honest, this looks the most promising I've seen all week. It's been it's been a difficult market so far, if I'm honest. Northern, good morning. Glad to have you. Haven't seen your name here in a minute. Ricardo, thank you. I appreciate it. Emilio, good morning. Tony, yes. My internet, I don't know what happened. It would flash in and out, and everything says it was fine. I just don't know what's been going on. So I'm looking to get fiber here soon. It's just not in my area yet, so I don't have fiber yet. I just have Cox. Dropping down to the 15-minute time frame, we have our we're just seeing some more details of where price is. We have our current low of day. We have our daily, or our previous day low. We have our London low, our London high. We have our new day opening gaps sitting there in the dashed blue. And those are the areas that we are looking to see price want to run up into. The opening range gap is actually a premium opening range gap currently. As I look at the structure of how everything is looking, to me it's 50-50. We didn't sweep this high right here. We didn't sweep this this high right here. We came up close to it, and we have this low resistance liquidity sitting down here. Now, do we have further lower prices that potentially could? I'm going to say on a daily time frame, no, we don't. We just mitigated and came all the way down into the daily time frame right here. So into a daily fair value gap. There's our daily fair value gap right there. And we've already come down to the consequent encroachment of it. So going back to the 15-minute, this is how we've worked that fair value gap so far. The daily fair value gap. So the only thing lower than this daily fair value gap is more swing lows that are further lower. Let's go back to it. And we're still talking 200, 350 points away. So it's not unrealistic that it could reach down there. So we'll keep that in our back pocket. But based on, I really want to see some type of liquidity. If we're going to go lower, I want to see some type of liquidity grab and then run lower. But we've seen just how heavy price has been lately. It's just been selling off. So if we're looking at selling off, what level do I just don't feel comfortable going short. So I think I'm going to pass on shorts today. I don't think I'm going to look at taking shorts. And I know I understand and realize that I said that here. I probably said that here. I probably said that here. And now we're way, way, way down here. But we're on a Friday. We need to see a retracement. The candle is absolutely gigantic. So I understand what I've been saying. And it's a lesson that I'm obviously learning, that the price can drop way farther than you ever can think or expect it to go. So we just swept this minor buy-side liquidity sitting right there on the 5-minute, and we have 5 minutes left on before market opens. I really like this low resistance liquidity sitting right here to the London high. If we can get something to participate in that, that would be nice. T-Loft, good morning. Sean, good morning. Charbel, hello from London. Welcome. J-Money, BPR in the daily. Yeah, are we running into a BPR? Is that what you're saying? Yeah, we absolutely could. To the left looks like a fair value gap as well. Yep. Charbel, 100% agree. Today is long bias, if at all. Yeah, good point. If at all is really the truth. It could be a crap day. Let's look at what we got for news. We had GDP and core PCE, or excuse me, we had core PCE at 8:30. Where was 8:30? Right here. So this big candle right here was our 8:30 candle. We may want to see if it wants to come back down and hit the data low. I'm not a big fan of that data low. Let's see what it looks like here. 828. Yeah, not really anything impressive on the 1 minute. A lot of low resistance liquidity here, though. That looks nice. If we're going to do that, a purge and then run. I love when we grab London lows and London highs. It just makes my trading so much easier. But we've already tagged previous day low, so we have permission to move higher. We got Chicago PMI at 9:45, which is orange folder news. Probably won't pay much attention to that. Market opens in 3 minutes. We're going to have a premium opening range gap, it looks like. And there's nothing here that tells us to go short, by the way. Just mitigated this last 1 minute fair value gap. Super close to London lows, though. This is going to be a hard decision. That's 30 points right there. So if we get any closer to this, I kind of like the idea of us purging the lows right here. I'm not going to take anything here for the 930 model. with the expectation that we were going to run down to the London low. There's the opening bell. Go ahead and mark 930 price here. Really looking for London low to be tagged here. Just tagged consequent encroachment of the daily. We do got a BPR over here. Let's jump to the 5-minute here. 5-minute order block. Sitting right there. And low of day. I'm just going to be literally in shock if we just continue to sell off today. I don't even know. Jonathan, good morning. MR, good morning, my friend. I just don't even know, folks. I don't even know. I might just say, screw it. Let's just go short. I mean, I can't go short here. We just filled the daily fair value gap. But holy cow. We got a 4-hour fair value gap sitting right here. Does that mean we go lower? I think so. There it goes. ES hasn't taken the low yet. That's good to know. Yeah, but it's already inside of a... I don't think it needs to. Does it? Jeez. I mean, there's no inefficiencies any lower than these two. At least on a higher time frame perspective. So will this turn into a BPR? If it closes above this, I'm just hoping it doesn't. It did. And it ran the high immediately. Opening range gap tagged and halfway filled. $15 minutes going to look like a massive wick. So to me, this is bullish. I just need to see the structure that gives me a potential entry. It could be 930 where we find support at 930 to move higher. Right now, I would prefer this fair value gap in the 1 minute or the first fair value gap, presented fair value gap to be tagged. 'We're not going to take any impulsive trades, no speculative trades, and we're not going to take any rule-breaking trades. We're going to follow our rules today. And if I'm in doubt, no trades. If I'm doubting something, no trades. I got to see something that I like, that I feel confident in. But I can't also hesitate. If I see what I need to see, I need to take the entry. Honestly, what I think could happen is a lot of fake outs moving higher. Basically, they are like, oh, everybody's probably thinking it's going to go long. Everybody think it's going to go long. So why don't we do this? Why don't we go boom, 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 and then we take off, you know? Maybe one of those. If we create an order block right here, I will take a long. If we close above this down close candle, this series of down close candles, on the 2 minutes right there, if we close like right here, I'll take that long. It's the idea that we have a breaker, a low, high, lower, low, sitting right there. For a continuation push. All right, we're going to take that long. There we go. I'm going to sell 5 here. Bye, sweetie. Want to see this act as a breaker here and an order block that we have right here. So I do want to see this run higher. I would like to go to the London high. That would be nice. 684. That's not an appropriate size anymore. I might need to, these are what I meant by it doing a fake run higher and not actually running. So if I can get, I'm liking the structure that we're getting. I'm liking the breaker that I have. I don't know if it's going to want to do a deeper retracement because we've already tagged a few things. So that's just the only thing I'm considering right now. Is do I want to cut the remainder of this trade? I'm liking the direction that we're going. I just don't know how much drawdown I want to be able to hold while I'm already in profit. Let's see if we can get above here. I'm reducing my risk here. I'll leave 2 contracts remaining. Because the hard part is there's a good chance we get a purge right here. We run lower, and I don't want to be a part of that. Sitting right at the previous day low, we're sitting on it. I'm going to sell one more there. Yeah, it's at a loss, but I just don't want a larger, I don't want it to purge lower. Yeah, I mean, I like the longs. That's really what I want to go for. But I think what I might do, I think I'm going to close the trade. And we're going to look for another opportunity. I don't want to take unnecessary risk. I wanted it to run before, but it didn't. That's what I want to avoid, was a drop like that. But if it gives us an inversion to the upside, like right here, we can play that moving forward. I'm glad I closed my trade. Cyrus, probability the low of the raid is protected for today. Yeah, I don't think we're probably getting down there. My question is do we sweep this liquidity right here, or do we respect here? If we see price, I mean, this is not bad. This inversion to the upside right here, I would take. If it's aggressive, there it's a singular. We swept liquidity. We're inside of the first presented fair value gap. We have low resistance liquidity. We have a higher time frame target. That's what I'll be looking for an entry. And I also like that it's around 10 o'clock. So we're inside of the macro. We took a breaker long, played out really aggressively, and then just faded against us. And then we'll see if this inversion, this fair value gap, wants to play as an inversion right there. Both these candles wicked the middle of the consequent encroachment of that fair value gap right there. We're going to take this long again. See if it gives it to us. We got low resistance liquidity right here. I'll sell 5 there. This trade will close if we close below this fair value gap sitting right here. Stops at break even. We're up 30 points right now. I'm half tempted to sell some. Since we did sweep liquidity, I don't want it to come back, stop me out at 0. Because if it can get up there, 650. We'll take 3 off once we hit this high, and we'll leave 2 runners to see if we can run to London high. All right, so there's our tag. We got 2 contracts left. Stop is set there, and London high is sitting at 680. We'll take our profit at 680. We did not sweep the high here. Deep retracement probably back to here. I'm going to sell 1 contract there because I'm probably going to get stopped out. And it filled me for another one here. Let's see if it wants to push lower. All right, we're going to sell that. Expecting that it was going to come back down to that fair value gap. What's up, Ryan? How you doing, bro? It has been a tough week. It really has. This is what I mean. I keep thinking that it's just going to pretend like it's going higher, then just get people out. Man, wouldn't that have been really nice if it just ran? That's the kind of move I freaking want to be in. I missed all freaking week. It's like, oh, here's the move. And then all week, it just, 100, 200 points in a single direction. And then I'm trying to get my run, and I can't get 30. And then it just stops me out. 30 stops me out. 20 stops me out. Oh, last trade was a win. I made 30 handles on that, and then I sold 3 more contracts at here. You can see what the trade was. I had it right here. There's my entry at 20,596. I sold my first trade here at 619, so that was 24 handles. And then we sold again at 50 handles. And then we sold another, well, this one was we sold 3 contracts and 5 contracts too. So a majority was between 25 and 50 handles, majority of Ike. And then we sold one more at 10 handles, and the other one was stopped out at break even. But it flipped my position because my stop loss was at 2, and then I sold that one in profit for 5 handles. Van Nock. I am losing paper. Well, I wouldn't be trading anything right now. It's going to run, and it's probably going to run without us. But there's no entry. Our only entry was this inversion that we took long. We took a breaker long. Those were our 2 trades. We took the breaker long right here, right on this push through this breaker. Got about 30 handles right here. I didn't even take the retest of the breaker. I took the break of it. Seeing this act as like support immediately because we rejected it immediately, that if we closed above it, that we should get a nice big candle. And that's what we got. And then we retraced back down here into the first fair value gap. We swept some liquidity right here. I see this as a protected low. I don't think we're going to come back down here. And then when we respected the consequent encroachment of the first fair value gap and then aggressively closed above this fair value gap right here, that was my entry for my long. Beginning here, the high it printed was 62 handles. We didn't get 62 handles. Our best sell was 50. But that's all we need right there is one of those. One of those. And if this decides to go to the moon now, then it can go to the moon without me because it doesn't have a setup for me to take. I was embarrassed yesterday. I was very embarrassed yesterday. Embarrassed in myself. Nobody knew about it. Nobody saw it. Nobody knew it was coming. But for my small account challenge, I thought I was in my funded account, and I took 5 contracts on a small account of, $500 and some dollars, and took 5 micro contracts and took a loss of $230. And my max loss is between $20 and $40. It really hurt. It really slapped me in the face. It slapped me in the face enough to where I think I'm putting the challenge on pause for right now. I'm going to kind of get myself my footing. I am still going to still trade the rules, but I'm probably not going to post it every day. I just want to see if it affects my ability to perform. Because saying that you're taking one trade, saying that you're going to grow this account, and then doing it in front of people. I don't care how many people we're talking about. We're just talking about in front of an audience that can criticize and or encourage, because mostly everybody here encourages. But I want to see if my trading really was affected by being public. I don't even know. I've been streaming trades for over a year. I can't even remember. So I'm going to do it in the background and give periodic updates for right now. I want to see if it has a significant effect on my trading ability. I don't know. I don't know the answer. But that kind of was a slap in the face enough to say, all right, something needs to change. Obviously, it was an honest mistake. We clicked the button. I'm like, all right, it's going. And then it was like not even halfway, 75% through the trade. We're sitting in a little bit of drawdown. I realize, I look at the account number. I'm like, this is my small account. What am I doing? I freaked out because I was already in drawdown. And then it just went lower, hit my stop loss. Here's our London high. It's going to be tagged now. We're in a high resistance market. I would expect high resistance. So what that means for me is if I take another trade, I'm going to take the trades with the purges, the aggressive moves, and after we sweep liquidity, I'm not going to hold runners. I'm going to sell full positions when we run liquidity. Because my guess is now that we run London high, we probably have some type of retracement. And then it does it again. And then it does it again. So I want to sell full positions in high resistance markets. It doesn't mean it doesn't do it every time. This could take off. But as a rule of thumb, look at this price action here. It's overall, it's not the best. But it's high resistance. We sweep liquidity, reverse. Sweep liquidity, reverse. Sweep liquidity, retracement. Sweep liquidity. Now let's see what we're going to do. At some point, you're going to get the expansion. But as a rule of thumb, when you see high resistant markets, you need proof that it's leaving the high resistance. I pressed short instead of long once and took a big loss. Took me about 20 seconds to realize my mistake. Ugh. I've had that happen before too. Too much information. Be involved. Makes it harder. And somehow, analysis paralysis. No, I think it just takes time to learn how to really understand and trade the market. And I think I'm probably 60% there. I think I'm above 50%. I don't think I know everything. I think I have a long ways to go. But if the marker is being able to read the market, since we trade ICT concepts like ICT, then I would probably say I'm, above average, above 50%. So here's that sweep of liquidity, or here's that reversal I told you about. Not the reversal, but this is the high resistance nature of the market. Is when you see price action like this, after you run liquidity, what does it do? It runs the other direction for a bit. Internal to external, external to internal. Today's first fair value gap have worked really well. Yeah, it did. But it was only used as confirmation. I thought about how could I have taken a trade here and here? Well, the only confirmation I really would have had is low of day being swept and treating this as a BPR and seeing if that's a BPR, we could potentially go long here. To me, that's still nerve-wracking for me. So for me, this was just another level of confirmation that when we did move through this level right here, when we did expand aggressively, that's why I took this long right here. I took a long right here at 943 into the high, sold half of it, and then got caught up in the chop right here. Did not know or think about being in a high resistant market. I wasn't thinking about that. If I knew that it was a high resistant market, which I did reference earlier, but I wasn't even thinking about it while I was in the trade. I was just literally thinking about my target. I would have sold all my position right here after we swept the liquidity right there for 30 handles. Instead, I sold half my position at 30 handles and basically the rest at approximately 10 handles if you were to average everything together. Then you have this one right here, me now looking back, seeing that knowing that this was a BPR, I was pretty confident this was a BPR. I was pretty confident that this was going to support again, and the candle at 955 and 957 was really the two candles that caught my attention. And then when you get 958, 959 aggressively moving the other direction, closing an inversion, that is a signal and price. That's a signature and price that I take for my inversion model. So inversion, enter here, and then we aggressively move up 62 handles in 3 minutes. So we're seeing the signatures and price. The biggest thing that I'm taking away for today and yesterday, or yet today versus the rest of the past week, is everything was based after a reversal for me. Everything was based on we hit a key level and then we start moving in a direction. Everything else didn't do that. So I really am not a good continuation trader, and I need to become that. There were so many missed opportunities this week. If I just had a better grasp on expansion candles, looking past the key level, saying, all right, yeah, we ran this key level down here, but heck, we look heavy. I mean, let's just go back here so I can articulate it. All right, yeah, we ran lower. We ran to midnight open. We ran all the way down here, swept all this liquidity over here. Do I really want to go long, or is it just so heavy right here that we want to look for a continuation? Yeah, I mean, you could do that on every single day. Seemed like it happened multiple times. And we missed the majority of the move, and then everything else was just high resistance or just slow and choppy. This one I was really mad about. I mean, guys, look how many there are. And then we deal with all of this. It gives us the beautiful move right away, and then we lose all our money in all of this. Beautiful move. That was all day. That was all day. All day. That was really hard for me to trade. I don't think I made money on this day. I don't think I did. This was very hard for me. Because from 8:45 till 5 o'clock, all day we dropped. Yes, we had one basic retracement, but it was nasty. Then we got a big move, and then yeah, this was a nice move here. I ended up playing some of that. But I would have rather played that. There's just, yeah, a lot of lessons in this week, for sure. Here's your breaker. This will be a breaker for a long, off of the 5-minute. TOC, ICT Concepts are the models that he's taught the most. His models are based off of reversals, yes, but he trades continuations all the time. The only one that's a continuation model is his Silver Bullet. His Silver Bullet is a continuation trade. That 5-minute looked good. Low, high, lower, low. We break higher. Bodies are right here. We give a little bit of space right there. Tap the breaker. Everything's efficiently delivered. Not a single 5-minute fair value gap there. Not a single 15-minute fair value gap. We actually filled it on this move lower. And then there's our expansion. If you guys are appreciating the commentary, hit the like button for me. I greatly appreciate it. And then also for those, we have about 4 more days for Apex's 80% off sale. You can use the code DTJ. That's up on the screen. I'll also link it down in the chat. All right, TOC. Later, my friend. Whew. I'm probably going to be done for today as well, folks. I have... Only reason I'm thinking of sticking around, I do have an eval that's sitting at $120 from passing. Considering trading that. But I'm going to be done on everything else probably. I belong to you. Do we retrace here? Or do we find support here? I'll try to take one more trade on my eval account. And it will only be one more trade. I'm already up on that account. So if I take a loss following that, I will be done. That will be my rule. If I'm honest, today feels like a breath of fresh air. I feel relaxed. I feel like I read the market. At least I read the market correctly and it responded appropriately. So that always feels good. All right, so we have this 15-minute. We have our 20-minute, our 20% level for retracement, that white line sitting right there. So I would honestly like to see us give a retracement after we hit this 15-minute. Actually, it looks like it's going to be that line as the target. That 20% retracement sits right above that liquidity sitting right here. So let's see if we can get that. This technically is this is a proportion block. It probably should expand aggressively right here up to this level. Let's see if it does it or not. If it doesn't, that means these two down close candles are insignificant, irrelevant, and that this would be the area that I'm looking at. But it is expanding, and it did tag it. So there's the sweep. That did act as a proportion block up to that swing high. I kind of want to take the turtle soup and just get my 10 handles that I need. That would have been 10 handles right there. Not going to do it, though. Not going to do it. I didn't sleep a lot last night. I went to bed at like 2 o'clock in the morning. I was working on building a website. There's no way I could have traded then. Yeah, 2 o'clock my time is London kill zone. No way I could do that. What are you guys going to do this weekend? You guys have any plans? What are we doing? We were going to do something on Saturday. Oh, it is my niece's birthday today. I need to give her a call. Ryan, you still on here? All right, so I don't like that we already swept the high. So nothing here, nothing that we can do. Next week is going to be challenging. We got FOMC. You mean Earth in the space? Not sure exactly what you're talking about, Cyrus. I mean, based on where you're responding, I don't know if it was something earlier that I said or not. All right, so we hit a 5-minute fair value gap. Do we support it? Or do we close? I'm going to take a long off of this level here probably. All right, I'm going to take a long right there. See if it gives me a reaction of 10 handles. Let's see, 93. Target's going to be there. Actually, probably a little bit higher. I need it. Gonna move a stop to break even to allow me to take another trade if I need to. Let's see if we can go up there and hit it. Oh my gosh. There it goes. All right. All right, we got it, folks. That passed an eval account for me on that retracement. Took that trade based on us having this being a breaker right here. Technically, it should have been anchored to this level right here. That being a breaker right there. We have a low, high, lower low. Excuse me. So I said it out of sequence. Low, high, lower low, expand higher, break down into that level. Was just looking for the reaction. It looks like it wants to expand lower, so that's why I wasn't wanting to hold it for a big move higher, just for a nice 10 handle scalp. There is not any up or down for Earth and for the market. There is not any border between reversal and continuation because of the fractal nature of market. I get what you're trying to say, but definitionally, there's a difference between a reversal and a retracement, or a reversal, retracement, and a continuation. We're talking about a continuation of the current trend. So, to me, this is a trend we're moving in this direction. So playing this long right here, this breaker right here, is a continuation of the trend that we're currently in. Yeah, I understand the fractal nature. It's different on every time frame, but well, then I'm talking about it in that specific time frame. Yes, if you go up to the monthly chart, we're expanding right now. Yeah, but nobody's trading off the freaking monthly. I'm not trading the monthly. Weekly, are we in consolidation, continuation, retracement? It's, to me, that statement is needs to be based on the time frame you choose to execute on. So if I'm executing on the 1 minute time frame, I take that back because that's not fully true. It needs to be based on a higher time frame that you can take day trading decisions on. So if you're an investor, well then yeah, you can make decision based on the monthly. If you're a swing trader, then yeah, you can take trades off the weekly and daily and figure out your continuation and reversals. But if you're a day trader or a scalper, you're looking at the daily and the hourly to give you context on what direction price is going. And is price going to continue in that direction or reverse into another direction based on that hourly time frame if you're a scalper? That's how I look at it, and that's how I conceptualize it, at least. This looks like that we could run down to at least this level here. We'll see if it wants to do it. But I'm going to be done for today, folks. I'm going to call it a day, call it a week, call it a month. That's what it is. Last day of the month of February. We're going to close that chapter and we're going to go into March expecting big things. So, with that, folks, God bless you. Have a fantastic weekend. I pray blessing over you and your families, and that you see increase in everything that you do. And with that, oh, Jordy, what's up, my friend? Yeah, I was just about to get off. God bless. Take care, and we'll see you next week. Bye-bye.